Welcome to After Hours at Traders Post for February 14th, 2025, Valentine's Day. I'm Tom Hartman, joined as always by Mike, your friendly neighborhood guru, Christensen. After Hours is your go to market commentary show powered by Traders Post, the best automated trading platform in the known universe, but more on that later. Today, we're breaking down the biggest market moves of the week. Monday.com proves the potential dominance of AI software over hardware. Next, inflation is rising or falling or rising. And finally, Bitcoin's consolidation might finally be over. The bell has rung, so let's dive in because as traders, we don't just watch the news, we trade it. How's it going, Mike?
Doing well. It's been an interesting end to the week here so far. The up and down volatility has been exciting. I don't know if anybody else has noticed this pattern showing up over the last few weeks, but it's like we rise on good news, we collapse on bad news, we rise on good news, we collapse on bad news, and it's just stuck in this interesting channel. Anybody trading those trends, though, is doing quite well right now. So the futures market has been where I've had most of my attention.
Yeah, the same sort of thing has happened in Bitcoin where I've been focused on too, and this consolidation range has just been great.
Mhm.
I'm almost like sad for it to go because if it just stayed like this forever, I'd just be raking in some cash. Um, and I sort of like wanted Bitcoin to go down to 74,000 just so we can have some more consolidation ranges and go up. But fine, the pain trade for me is Bitcoin to $250,000. I could get that.
Fair enough.
The what's been interesting is that the Trump trade has sort of now like petered. It's sort of like rippling throughout the market. We're now seeing different things that are happening.
Mhm.
We'll touch on that a little bit later, but it's starting to manifest now in more solid trade ideas as opposed to like Trump meme coins and just shorting bonds.
Right.
I did want to start off this week uh, with Monday. So Monday.com has this whole AI driven surge in the price. So AI is
Mhm.
proven to be more than just hype. And Monday's blowout earnings prove it. With a 26% jump in share price, surprising revenue beats, and AI powered automation driving adoption, is this just the beginning of a new wave of tech winners? This is one of those stocks that you set me down on.
Yeah, so this one came up in another screener that I run every day at the end of the day, and this is one of the big volume movers that came up at the top of my list. Monday in general was an interesting company just from an earnings growth perspective. Traditionally I wouldn't really consider much about the SaaS plays like this. It's a fairly small company, not a huge one on the list. I think overall market cap's about 15.8 billion. So it's big, but it's not huge, obviously, the mega cap companies. That said, that news, I think, spells out the signs of this story that I've been trying to keep track of for a while now, which is around the AI aggregators, if you will, which is really kind of, I think, the next wave that we're going to be able to anticipate in the market. And it really comes down to which software players out there are utilizing AI to their advantage to dramatically increase the value proposition given to customers. And Monday, I think, is a great example here of how their integration of AI is improving the experience for their customers and adding a whole lot more value, allowing them to increase revenue. And of course, we're very quickly seeing signs of this elsewhere in the market in the early stage startup environment. Companies like Cursor AI, which I know you use, I use it almost every day now. It's my IDE of choice because it integrates those AI models from OpenAI and Claude, and any other AI model that you're familiar with using is kind of integrated there. You've got some options to choose from on which model is used, but they just copied VS Code, integrated with OpenAI, cobbled together some proprietary technology, and the next thing you know, Cursor AI is worth $2.5 billion from the next raise of capital that they've acquired, and it's one of the fastest growing SaaS companies like in history now. So it's important to recognize that I think right now the integration of AI technology is going to start showing up in a lot of different companies, and it's going to be important to keep an eye on what that looks like. Like we're past the initial stage of like the AI buzzwords. The next step is, okay, who's actually integrating this? How are they integrating it? And how are they driving real value? So maybe we can run through the headlines of how Monday accomplished this.
Yeah, that's right. So let's take a look here. So I thought it was very interesting. There's this nice summary article that I'd love to take a look at. So basically, the headlines we've been seeing is like basically Monday was already implementing an AI strategy that wasn't working. or wasn't working to the degree that they thought
Mhm.
it should. And then to your point with that whole AI buzzword, that just tack on some AI over here, say that
Right.
it's AI, and people like it. Then they had to pivot, and the way that they pivoted it is almost like a one of the great use cases, one of the great examples of how to actually do this properly. But just taking a look at the summary from this article, this is from VentureBeat, says with the advent of and popularity of generative AI in the last 3 years, particularly since the debut of ChatGPT, Monday, much like every other enterprise on the planet, began to consider and integrate the technology. This is the bolted on AI that we saw
Right.
last year. The initial deployment of Gen AI and Monday didn't quite generate the return on investment users wanted. However, the realization led to a bit of a rethink and pivot as the company looked to give its users AI powered tools that actually help to improve enterprise workflows. That pivot has now manifested itself with the company's AI blocks technology and the preview of its agentic AI technology that it calls digital workforce. Monday realized the limitations of the AI assistant approach, which is the bolted on AI, and what users really wanted. Simply put, AI functionality needs to be in the right context for users, directly in a column, component, or service automation. AI blocks are predefined AI functions that Monday has made accessible and integrated directly into its workflow and automation tools. For example, in project management, the AI can provide risk mapping and predictability analysis, helping users better manage their projects. This allows them to focus on higher level tasks and decision making while the AI handles the more repetitive and data intensive work. This is the key
Yeah.
thing here, that people are able to now focus on higher order thinking.
Yeah, I think this is a really important takeaway. It's not just giving people access to an AI tool that makes it interesting, right? Like we've seen that in several tools out there where, like you might have like a Copilot that is now a chat interface that works in line with the software. That's great, but it's sort of like if I was a consulting firm and I was providing data science offerings to my customers, the clients that I took on, and I basically just created an environment where they could write their own AI models, right? That's not really going to work for them. They're more interested in our strategic approach for how to use these tools and using our expertise and our domain knowledge on how the product works to deliver something that's already sort of pre-baked. So companies really need to up their game in terms of using these tools properly and directly integrating the technology where it's most appropriate for their customers and making it just turnkey for them. They don't want to have to ask a bunch of questions of an inline AI chatbot. They want the AI technology built in a way that smooths out the process or makes the software more efficient or provides better recommendations, however you've decided to implement it. But the key opportunity here for entrepreneurs and small businesses, in my mind, is around the correct integration of the tool in the most strategic way possible. I had an opportunity to actually test this in sort of the wild recently. I got a chance to test the software of a new little startup that has a new app building platform. And the way that they've done this a little bit differently than the other ones I've seen out there is, with Cursor, which is a really good example for software developers, right? Like, give me a tool that allows me to build an app quickly using AI. Well, it's sort of the same problem. There's a chat bar on the left. I have to ask it questions, and it'll modify some of my code for me, and I can apply those changes. Cool. I think that's a step in the right direction. But let's say that I don't really care about how the app is built or the internals. I just have an idea in my mind, and I really just want to write out the vision for what that looks like. What this little startup has done differently is they've backed the whole interface with Google Cloud. So it's connected to Firebase. You have to, create a new project. You have to give it the API keys. You give it access to everything. And now it's just utilizing the framework for how to develop an app on Google services. Then you give it the ideas of what you want it to develop. And it's already pre-selected the frameworks that are going to be involved. It's going to use Next.js. It'll use, Vue.js and so on and so forth. And I realize I'm speaking in technical jargon here, but essentially, the tool has already made all these selections for you. It's already decided a lot of the software that will be used in order to build the app. You're not making a lot of these selections. All you're really caring about is, I want the app to be built. I want people to log in with Google. I want it to look like this, and I want it to connect to these services. And so, what this is an example of is an environment where somebody's taken the pieces and put them together in a way that drives more value by making it easier to use. And I think Monday is doing exactly this. This is where the opportunity is cropping up.
Well, it reminds me so much of the App Store, for when Apple released the App Store, the idea was that the benefit is that you had this common
Mhm.
infrastructure, right? The smartphone that you could build an app on, but it made it so that people can clone your app
Mhm.
pretty easily, right? You weren't coming up with something unbelievably brand new. If you had a game, someone could clone it. You had a to-do list app, someone could clone it. You could also have these this fight, and so you had to sort of like race to the bottom for how cheap you could make
Sure.
it, how pretty you could make it, blah blah blah. This is like that. It's like the different version of that, right? So we saw last year, I believe it was last year, where OpenAI was trying to push this whole GPT store. Do you
Mhm.
remember this? Where you'd be able to create a GPT, you'd be setting up your prompts, and then you would be selling this GPT. And people had it in their minds that, oh, I'm going to sell access to
Right.
my GPT, and people are going to be able to use it. I'm going to become rich. And then it turned out, well, that couldn't be the case, because the we with natural language, I don't need any technical ability to replicate
Mhm.
what you're doing. Right? You don't have any access to any special technology that's doing anything like that. And so it just flopped. Whereas now, and this is what further on inside the article for Monday was talking about, they're turning these agentic AIs into essentially, if you had a 100% company, now you have a
Mhm.
1000% company, because you have a project manager and a data entry guy and a customer service guy and a review
That's right.
documentation guy, all behaving behind the scenes
Yep.
for you. And so you can actually behave like a larger company. And so if you have any shortcomings within your process, shortcomings within your workflow, shortcomings within your data, it'll be exacerbated by the AI. AI won't work. But if you have good core, good bones, and you toss this on, and you make these systems so that they actually speak to the AI, now the user can be
That's
completely
right.
non-technical, and then develop what they
That's
need
right.
to do.
Yeah, I think right now
So you're
we're
seeing
kind of
people who are
expecting that people use AI in its most productive form, but not everybody has the ability to use these tools to the best of their ability. So you got to bake in that solution for customers so that it's already prepared for them, that it's just turnkey.
what's fun about this is that the question was, would this actually increase
Hmm.
productivity? And would it then reflect in revenues
That's
and
right.
share price? And we could all sort of get the idea of the NVIDIA plays, the AMD plays, the infrastructure plays, the Oracle, because, well, whether it was going to work or not, billions of dollars are going to flow into the
Hmm.
infrastructure. But now we're seeing with the Monday example, no, the software side of it, you have way more examples of where this can actually take off, and companies that you might have seen. I saw so many people post, I saw ads for Monday pass. I've been seeing ads for Monday since I've been alive, and now's the first time I'm like, hey, maybe I should
Monday.
try
Sure. Yeah.
monday.com. Yeah. Which I find to be super fascinating, that now the rush is to like, hey, you have an infrastructure, you have a code base, you have data or whatever, surface that information with these tools. And so we're seeing stuff like, as far as the trade is concerned, we're seeing stuff like what do we have here? HubSpot
Hmm.
coming back on the scene. We're seeing
Hmm.
Shopify, right? Can you imagine the Shopify experience now, where this it's AI enhanced, and so this promise or this uncertainty of what it can actually turn into and how useful that might be is causing a lot of these stocks to either jump up or potential to jump up. Adobe Adobe, that's been like a garbage company for me forever. I hated their tools. I had to pay all this money in order to use Photoshop and Macromedia and Fireworks and Dreamweaver, the
Hmm.
whole thing. And now they have I keep looking at their AI tools and their software, and I'm like, I guess I maybe have to
It's pretty
buy
cool.
a
It's pretty
subscription
cool,
to
especially in
Adobe.
Photoshop. I find it hilarious that you mentioned Macromedia and Dreamweaver there. That should age us right away.
Team for the team stock, Atlassian, and then Intuit, the invoicing
Mm,
software. Like, I was thinking about all the tax softwares, all the invoicing softwares. Oh my god, it becomes a
that's right.
revival. Mint.com, all these different things. So now it's like, now if you wanted to be a value investor, and you wanted to take a look at the bones of a company, and you actually wanted to make a bet on that versus just buying
Hmm.
the index of a thing, you can make, what is it? We're seeing moves of 1, 2, sometimes
Yeah,
300% on some of these assets that are not in any index thing, that are beating the S&P like by
sure.
far. A basket of AI stocks over the last 6 months, I believe. Actually, the last year, on average, has gone up
Yeah,
87%.
and this is perfect. Monday's a perfect example to look at in terms of even just its more internal fundamentals. Just looking at return on equity, for example, which is their retained earnings plus the amount of increase in shareholder value from the shareholders' equity, from the previous year, it's up 21% is the future ROE over the next 3 years compared to an industry average of about 11.9%. So even the amount of internal growth that you can expect from their earnings in the future is expected to grow pretty rapidly. And I think we can expect that kind of outcome for many software companies across the board. So the next thing to look at would be to say, okay, let's pull back the list of all the software companies that stand to gain the most from this opportunity that haven't currently announced AI integrations, because it's still early stages for many of these larger, a little bit slower to move companies. I'd be looking for companies like Workday or larger HR organizations, insurance companies. Like, there's so many opportunities to integrate AI that can rapidly improve productivity and increase shareholder value, obviously.
Well, the last thing I want to ask you that I can't wrap my head around, I don't know what to think about it before we move on to the inflation story, is that a lot of these AI plays, the ones that are actually generated the most amount of revenue on promise, are enterprise solutions. We're not seeing a bunch of retail stuff. Now, we are seeing solopreneurs and micro SaaS businesses popping up with interesting ideas that they're spinning up, and they're generating, $5,000, $10,000 a month in revenue. Totally understandable, but those things are not necessarily set to scale.
Not to hundreds of billions in overall market cap. Sure, right.
Exactly. And so I'm wondering, I have not seen yet where the threads are, the retail thing, the dating website that turns into an unbelievable thing, the new email client that actually is mind blowing when it comes to these agentic AI. That's what it's going to be on my radar. I don't know if
I have
like that
actually, the Wall Street Journal did a story on this the other day. Apparently, Grindr is integrating some AI solutions to basically communicate with other profiles in a way that sort of adds to the experience. I don't have the full details on it, but this is a step in that direction where we're using AI to try to create and improved efficiencies. And one part of that process is really kind of, starting with your dating profile, sharing information about you, getting through those icebreaker conversations, but in a way that's more efficient. There's a lot of people out there to have conversations with. If I can have conversations with all of them at the same time through AI, that gets really interesting.
All right, so I just have to mention this. So I met my wife through
Okay.
OkCupid, and we both love the platform because I love the questions. There's like basically this seemingly infinite number of questions that you can answer, and so if someone really cares about the deep dive on you, they could get these obscure questions. But what I always felt was there was never enough questions, never enough interesting questions. If some AI was generating these questions for me to answer, I'd be on that website freaking all day long. If they wanted me to pay $100 per month, I would pay $100 a month. But what you were just saying here, this idea that if I read it right, the idea that my AI calibrated to my needs and wants and my interests and all that, who speaks like me, is speaking to someone else's AI who's doing the same, and then they had that match that happens, and hey, look, we really hit it off, and then the two AIs are sort of like matchmaking us together. Oh my god, I cannot wait for that. Those wedding vows, or that speech at a wedding where it's like my AI met your AI, and they knew at first AI contact that we would be in love.
Now, I think the initial offering that Grindr has here is a beta test. I think they only made it available to like 10,000 people on the platform. And that may not be exactly their offering, but it was what came to mind the moment I heard the idea of AI and dating is, well, obviously, if we want to scale dating in a way that's more effective, then I would need AI talking to AI, right? Like, that's more agentic. The other concept, and this definitely seems to be more in line with what they're actually trying to accomplish here, is the AI Wingman, which is what they're calling it, where it's offering you advice through your journey as well, based on what it knows about, your history. And, you could ask questions about, well, what should I say here? Things like that. Obviously, those are the types of tools that can boost people's confidence, make them feel better about the dating process. From what I know, and I have two siblings that are in the dating scene at the moment in their 30s, it's brutal out there. So it sounds like any opportunity you can take to make the experience better, I'm all for it. Even if it's a tool like AI. At the moment, it feels like both of them are using ChatGPT, but to integrate these tools directly into the experience into a tool, I think that's what we're expecting to see over the next year or so. So I'm looking for companies that are doing exactly this. And the agentic play is going to be around companies that effectively leverage their own data, their own processes, and their own strategic thinking to get the most out of these tools on behalf of their customers.
Excellent. So next up, inflation watch here. So the debate over inflation is reaching peak confusion. I don't know if you're feeling the same way I'm here. Yeah. Some say the Fed needs to hike again. Others say spending cuts will do the trick, and tariffs are being framed as a necessary evil. Meanwhile, gold and the dollar are falling together, signaling a shift in sentiment. So WTF is going on? Now, you know, I've been screaming about this for the last couple of months that I think inflation is going to pick up. But really, I was sort of thinking that I was assuming that the government on the fiscal side would all be like it was before, that everything was just talk, and no matter what, you're going to come in, they're going to pump, cut rates and everything like that. That doesn't seem to be happening over here. It seems to be this weird war of fiscal spending and long-term rates. I never thought I'd hear about the government think about like actually do anything about long-term rates. I'm not sure what to think about. So what I'm going to do is bring up just this conversation. I thought it was super representative of the back and forth that people really don't know what side to land on. Let me just pull that up here for a second. So this is there's an interview on CNBC by at least one person I really know and respect that I thought was particularly interesting. One second here. Or he's making the argument that the Fed should raise rates.
You were not convinced that the inflation bugaboo was laid to rest?
I wasn't at all, and I think the only surprise to me was so many news outlets yesterday calling it a surprising upturn. There's no, as you said before to Rick, there was nothing surprising about it. My principle is very simple. If you double the balance sheet at the same time the fiscal deficit is being increased, as in 2020, 2021, and take interest rates down to zero, forget it. You have created inflation. It is not a case of you're depending on housing versus non-housing, and housing cost is coming down. Yeah. Something else will pick up because there is a lot of liquidity. So there is nothing surprising. And I think the Fed should react next month at its meeting by announcing a hike in the interest rates.
Next month,
March 19th.
It will never happen.
They will not happen.
Because it makes too much sense.
They never do what I suggest they do. September, I said they should not cut at all, and Powell cut by 50 basis points, and now I'm saying he should announce an increase.
Lindsay, you have the floor.
Okay, so that just sets the idea. He's the inflationary guy. He's saying they should raise the rates. Now let's hear this other side.
Rick talked. He talked. I'm sorry. I had to do Sheree because I'd already talked to him. But take it away.
I think when we look at this ascending trend in inflation, it first and foremost calls into question whether or not the Fed stops short of a sufficiently restrictive level. As you long know, we called for 6% at a minimum. The Fed was so concerned about inciting negative growth on the way up that they lost focus of the second side of their dual mandate, which was reinstating price stability.
It wasn't the election, was it?
No.
They caused them to want growth.
I think they realized they made a policy mistake on the front end. They were late to the inflation taming party, and they didn't want to leave their legacy as making a second policy error, raising rates too high. But in that concern, they did end up making a policy error. We stopped short. We didn't raise rates high enough. And now we're still contending with above target inflation, which we're going to continue to struggle with for some time. If the Fed doesn't get this under control, the risk now is not necessarily recession or outright negative growth, but the risk is eventually choking off upside potential, pushing us into a stagnant economy. Sluggish growth, still elevated prices, the very definition of stagflation.
If tariffs are inflationary, and if deficit spending is inflationary, and we're going to extend the tax cuts maybe permanently, we were just talking about that, how is anything that you're hearing from the Trump administration going to help with what we already know is a problem? It's already a problem.
Remember, tariffs in and of themselves are not necessarily inflationary. A one-time price hike lacks the upward momentum needed to incite inflationary pressures. But
if you try and pass those prices on to consumers, if you try and do a deadline, it would.
Correct. And then if we get into this back and forth tit-for-tat retaliatory relationship.
But Joe's right, the inflation
is there anything that's going to help? Is DOGE going to help?
If we can find enough line items, if we can find enough areas to offset that expansion in other areas, that loss in revenue from other initiatives, then absolutely.
Is it going to help
see
the consumer at home?
Well, it
those
could.
can offset it because it lowers their tax bill. Is that the thought?
Absolutely, but it's going to depend on where we see the cuts, where we see the increases. And there has to be an equal offset. And that's the big uncertainty that the market is grappling with right now. Can they?
All right, so you can just hear it goes on and on. They go back and forth, like could be inflationary, could be not.
Sounds like a whole lot of speculation, though.
Yeah, well, so that's the whole thing. The whole other than controlling the interest rates, the Fed, their biggest tool is forward guidance, is talking the market into lowering the uncertainty of what the market thinks will happen in the future in order to help control longer term rates and behavior within the markets. And they can't. We have the situation here, if we just take a look at this article from the Wall Street Journal, where so we have here two major indicators this week. Both showed inflation running a little hotter. So CPI was up, but then at the same time the CPI was up, PCE was down. So core inflation is down, and so we're ended up in the situation where the Fed likes to look at whatever metric favors their narrative. They'll be like, so if they needed to make a move because of inflation, they would cite CPI, and if they don't want that, they'll cite PCE. So when you have core going down, where it's not taken into consideration, what is it, energy and some other factors for CPI, and the Fed is going, well, we're going to pause because that looks like it's going in our direction. Then you sort of like, well, what are the market players going to do? What are they?
Maybe I haven't been paying that close of attention, but I'm pretty sure the Fed always prefers PCE over core inflation or CPI.
Yes, but they'll cite it.
Okay.
When they'll cite it specifically when it supports their thing, and if not, they'll say something like inflation metrics are going higher. But you're right, they never actually cite CPI.
Right. So I agree. I think what's interesting at this point is the way that the futures market is pricing this out. At the moment, it feels like there's a very high probability we remain paused in March's meeting. 19th of March, 97% chance of a pause. 7th of May, an 80% chance of a pause. It's not until we get to June that there's about a 50-50 shot that we might see a reduction in rates. At least that's how the futures market has priced it out. And typically they're pretty spot on with their predictions. Maybe not so much so far out, but by the time we get to May, we may have a better prediction on where we expect rates to be in the future. That said, what I'm taking away from this is we remain paused until we can see more data coming in, at least for the next two Fed meetings. And that just adds to this confusion here, because pausing just feels like this indecision point where we're not sure what action we need to take. We're not sure what's happening to the economy. We're not sure how Trump's policies are going to impact inflation. We have to wait and see. And that's kind of the game I sense we're playing right now.
So I have just like you were saying, it's all uncertainty, it's all guesswork. I have a couple of questions that are floating through my head that I'm going to be paying attention to over the next couple of months. One, the tariff game or the tariff rhetoric seems to have tamped down a little bit. They're like, okay, let's pause. We'll give you 30 days to figure out what you're going to do, and maybe we'll do this tit for tat. So it's like, okay, what's going on over there? And we can tell that that's the case because the dollar would not fall otherwise. We got a lower low on the dollar. Second, we have the Ukraine war might be like over as far as American involvement inside of that war, as at least fiscally. In fact, he's trying to like request Trump is trying to request $500 billion worth of like rare earth materials or whatever in order to compensate for the money that was spent. Okay, whatever. If he's not putting more money into it, that flight to safety that normally happens during like wartime periods where the dollar goes up and gold goes up, you would expect that to reverse, which is exactly what we saw. We saw gold drop 2% yesterday. We saw the dollar drop as well. Right, the day before that, with the CPI information, we had the dollar go up higher because of the inflation. Right, we had this a little mini blip within futures and crypto and within currencies because of it. So the major players are trying to figure out. It looks like they're actually basing the decision based on what Trump is going to do. Like that seems to be the main thing that the markets are paying attention to. Then you add to that there was an interview with Elon. I won't play it now, but Elon Musk did an interview with Donald Trump in the this week, and he says we can cut the spending for the government by $2 trillion. Sorry, $1 trillion, and we can increase over the next year productivity GDP by 1 trillion. And so he's saying if you do that, then you don't actually get inflation due to fiscal spending. So then people go, wait, so then if we don't have inflation and there's domestic growth opportunities, and the Fed is sort of like saying, well, we're just going to pause, we're not really worried about anything. Well, that reduces uncertainty with a bias towards productivity, and you should see stocks take off, which is what we're seeing in the AI space.
Sure.
Which is what we're seeing in a bunch of these places where there could be squirts of money going in. It is. So I'm all of a sudden like pretty bullish, pretty significantly bullish. So then the final thing we take a look at your your liquidity indicator, right? And that ticked up this week to a new high.
Not a new high.
All-time high,
Okay,
but a new
yeah.
high.
We're starting to head
just
upward. Yep.
Right. Yeah, so that's like, hey, liquidity can be increasing, uncertainty can be increasing, productivity up. This is maybe full on run a new the .com.
We've talked about this
run
before.
up.
We've been in a bullish run for quite some time now, and we haven't pushed. Even if you just look at this from a technical perspective on both the NASDAQ and the S&P 500. We still haven't posted lower lows yet in a way that's making me feel like we've started to form a reversal in the market. So until we receive a signal otherwise, it's still a bull market. I'm still on this rise upward, and I'm right there to say that I fully support the idea that we could see a continuation from here. I would be interested to see if there is a pullback of any kind. It's going to be coupled with negative news of some kind. And in general, when we see tight ranges of, low volatility like this, ATR is starting to recede. The options market will be obviously a good indicator of where we're starting to expect volatility to show up. All of that said, it's going to be a pretty big event if we do finally pull back. I would fully expect the pullback to be pretty sharp and pretty expensive for anybody who's still holding to the long side and doesn't have a short hedge against that.
This is the part I hate. I hate that before the major drop because of some major event, you have this blow off top. Like that happens so often. You have the spike
That's
up
right.
blow off top, and there's no way to position for yourself for it.
But
exactly.
the sentiment that you're describing right now is what has me concerned. When everybody thinks, oh, well, this bull market's going to continue forever, that's exactly when you should start preparing for the worst.
Well, that's why Kim Carson, I got to bring him up, I guess, every Friday. I was planning on talking about him today, but he says calls for the upside and position for the short side. So I just want to play this last clip here from Druckenmiller. And he was on CNBC the other day. I thought it was interesting to get his view because he was very big over the last year about shorting bonds. So let's just hear what he has to say here.
When you spoke at a conference and said that you were shorting U.S. Treasuries, I think it was 10 to 15% of your portfolio at that time. You still shorting Treasuries based on what you're watching?
I still have a short in Treasuries. I know a lot of people have been surprised by interest rates rising after the cut. Of course, we weren't, because I thought the Fed was making a mistake, and I was worried about the same animal spirits we've been talking about, and of course, our horrendous fiscal situation. Having said that, we've come quite a ways. I think we're probably in the 7th inning, but sometimes you can make a lot of money from the 7th inning to the 9th inning. And who knows if the Fed stimulus into a melt up in asset prices with the kind of animal spirits I talked about give you upward inflation, which is not our forecast, but we're definitely open-minded to it, and we're not expecting lower inflation. That could tip the bond market and create a problem. So we're still short Treasuries, but we're certainly not pressing the size of that position now.
You've said in a perfect world, Stan, that you're not a fan of tariffs, but that it could be potentially the lesser evil if it's done in moderation.
Yeah, I don't want to exit this interview as tariff man.
Good call.
In a perfect world, I would not be for a 10% tariff, but we're not in a perfect world. As you know, we have a big fiscal problem. Mandatory spending plus interest expense is literally 100% of revenues right now. And both sides of the aisle have said they are not about to cut entitlements, which is in the room. Having said that, because of that, we need pay-fors. So our main choices are an income tax and a consumption tax like tariff. So when I say tariffs are the lesser of the two evils in terms of those two, because we have a fiscal problem, we need revenues. Tariffs will generate revenues. We also have a private savings problem in this country. They're far too low. So I think a lot of economists who are out raising the alarm bells about tariffs would probably be fine with a consumption tax. To me, tariffs are simply a consumption tax that foreigners pay for some of it. Now, the risk is retaliation, but as long as we stay in the 10% range, and I think so-called fear of Donald Trump, I think the risks are overblown relative to the rewards. The rewards on.
All right, so correct me if I'm wrong. That sort of touches on what you were saying last week, that consumption tax might be more palatable to people because it's like, well, why shouldn't it be on the people who are spending, who have the money?
Only if it's offset by a reduction in income tax. If the two happen at the same time, that's detrimental to Americans. If they're, in other words, if tax rates remain the same, income tax isn't reduced, then effectively all you've done is increase the cost of purchasing goods over time. So that would be inflationary. Right. But if we're able to offset that, then yeah, I think that rewards savings. That's what we want to see. That rewards, ultimately earning more capital to keep for the household, or earning more income to keep for the household. And then, obviously I want to see that. I think that ultimately leads to more investments over the long run. Anybody who has a little more money available and they're prudent in their financial future is going to invest more in the market as a result. And then if you decide to spend, which of course is now being disincentivized, if spending is disincentivized, that ultimately leads to a higher savings rate. But it could also be impactful from a consumer spending perspective, which, you'd have to keep an eye on those sectors of the market that are going to be impacted on a reduction in spending.
Right. Well, I'll leave it on saying that all this stuff is lining up for a type of path that seems almost predictable, where we get, let's say, a blow off top. We get a bunch of liquidity injected into the system. Some external shock happens that causes volatility. Some people get wiped out, blah, 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 but there's still liquidity within the system. Bitcoin hits some high, S&P hits high, NASDAQ hits the high. You have this K-shaped economy, and then you have all kinds of political turmoil that happens because of the administration. It seems like that's the most painful way for things to move forward, a bunch of volatility and all these different assets forward. And why should it not go that way? Because it's gone that way over the last 100 years. So that's what I'm looking forward to. There is I like it because it's opportunities to make money.
That's what we're always looking for.
That's why I like it.
Yes,
exactly. Yeah. Just to button up on that, I wanted to mention the SMCI trade that we talked about back in November, where that stock was almost going to get delisted. It bounced basically the day we talked about it on Friday. It made a low, and then it rolls all the way back up to $46, like from I don't know, $12.
It's closed after market at $47.91, and on the way up for sure.
So just to mention, we talked about this is why these types of volatility in all these different assets, and why we're paying attention to it, because you could make that was a 400% move gain in the options space, and that's only when we were talking about the options at the time. It wasn't even the best price you can get the options on. It actually moved up. Like, these opportunities that exist in the market can reward you for expressing a trade and not just consuming the news. Same thing with Monday.com, same thing with Nvidia, all these different things. So I thought it was a nice victory lap that the price moved basically exactly to where
how good does the SMCI team feel right now? We didn't get delisted.
Well, now there's the possibility that they might still, because it moved up because of the idea that they were going to meet their filing requirements, their deadlines, but they might just be saying that. So like, here's where I would sell my option and then buy a put, like take maybe 10% of the money you make on the call, buy a put, and then if it does fall, you'll make even more because it'll fall all the way straight down to bankruptcy. Like, that's the fun ride of these
for sure.
All right, so I want to end on good old Bitcoin, but before we jump into our final segment, let's take a moment to shout out Traders Post, our sponsor for the show.
I bought the ad placement and paid myself, by the way.
So let's take a moment to shout out Traders Post, the automated trading platform designed to take the friction out of executing your strategies. Whether you're trading stocks, futures, or crypto, Traders Post connects seamlessly to your broker or exchange, giving you the flexibility to automate your trades without missing a beat. If you're tired of being the bottleneck in your own success, it's time to let automation do the heavy lifting. Head over to traderspost.io and see how easy it is to streamline your trading. Okay, now I feel like a real podcaster.
Yeah, we got an ad break in the inside. I like it.
Good.
The I think the image there is the telling part for those of you that recognized all the icons. Obviously all of our broker integrations are the growing list of integrations, but where you get your signals from, obviously most of that comes from TradingView. Some of it's TrendSpider, and we have a growing list of companies out there and groups that are using their own custom environment. So that third icon there with the little code symbol, I'm always excited to see the different custom ways people are doing integrations. And there's some cool Python stuff going on out there. I've got my own little AI tool I'm trying to put together, which generates images, shoots it over to OpenAI, gets a bullish or bearish signal from that, and then shoots off a webhook URL from there. So, increasingly, I'm always excited to see the different diverse ways people make the connections form together.
That's right. All right. Lastly, with liquidity rising, regulatory clarity increasing, and sellers exhausted, Bitcoin might be gearing up for its next big move. Meanwhile, blue chip crypto assets are catching fresh bids. Is 250,000 Bitcoin on the table? Will old coins beat new coins this cycle? Let's see. So I just wanted to point out a couple of things here that I thought was particularly interesting. We already talked about a little bit of the first part with the dollar fallen and gold fallen. So let me just pull up my chart over here. So we're seeing here the dollar making its first lower low, which is beautiful. Oh man, we want that lower low. So we were talking about how in 2016, the same thing happened when Donald Trump was president then, where the dollar peaked up and then rolled over, and that was a nice run in assets. If the same sort of thing is happening here, we can expect that perhaps the dollar comes back down to the 100 support level, and that could be more than enough liquidity in order to drive a move higher. What I care about is that the dollar's fallen at the same time that gold is falling.
And at the same time that global liquidity is rising.
Exactly. So when you're seeing that, it's when you get these confluences, these correlations happening together, that's where it's assigned to you that, okay, there's something here to pay attention to, because all these trend moves that are going to be the beginning of a trend turn for the next couple of months, they happen like this, like they coincide all together. And that's what we're seeing here. The liquidity indicator, let me just pull that up for a second. But what was it again? Liquidity index. I think this is the one. Nope.
It's in the community one there. My username's there at the top.
I
that's right. You have the custom one. I need to make my improvements there.
Yeah. Actually, let me just take off the screen for a second. So just to mention, I wanted to bring up something that let me pull it up here. So this is an article that was in Kitco News. So it's not just us saying that, hey, there might be some sort of breakout potentially happen in Bitcoin. We're seeing it in other places. I thought this was a particularly interesting piece. They're saying institutional demand is pushing Bitcoin higher. Recent data suggests that OTC supply of Bitcoin is drying up. Both MicroStrategy and BlackRock continue to buy BTC at a pace exceeding daily production. Once OTC desks run out of available supply, they will have no choice but to buy directly from exchanges, which will put immediate upward pressure on price. This is a textbook example of supply and demand mechanics playing out in real time. Another positive sign comes from on-balance volume, which appears to have bounced off a key support level on the 4-hour chart. This suggests renewed accumulation, a potential early sign of a broader trend reversal. So when I start seeing things like this, I get really excited. Have you seen other people talk about the idea that it's not retail that's pushing this move up. That's going to push the move up in crypto, but it's going to be institutional investors.
I mean, that narrative has been continuing since roughly 2018, 2019, when I first started hearing about institutional involvement. Have I seen a return or a resurgence of that lately? Not any more than usual. No, I think that the institutional involvement is right in line with where we would expect it to be. Yeah.
I thought it might be interesting to pull up. I like listening to what Charles Hoskinson, the founder of Cardano, has to say. Not just because I like the Cardano project, but because he is him and his organization is deeply involved within the regulatory framework of crypto within the United States. Like they're one of the people who are really pushing that, and so he's connected to he's been at Senate hearings. He's connected to the people making the decisions. And there's 3 particular videos, short videos, I wanted to show of him discussing this idea here. So the first one comes from we talked about a couple of weeks ago that when Donald Trump became president, there was this push towards regulatory clarity that that the administration was asking for. So they put out a call for basically information to be provided to policymakers. And then, so the idea here is that Charles is talking about that process is essentially underway. And let's hear what he has to say.
It's going to take 90 to 120 days to get some basic laws passed. It looks like stable coins will be the first that they regulate. And then moving from that, they'll do asset classification. But before the end of this year, I do believe very strongly that we will be on much stronger foundations in the United States and thus globally for running a cryptocurrency business. It's going to take.
So we're seeing a front run of that sort of thing with XRP. That's up to what, $2.45 now? Like what we thought was this dead coin, all of a sudden is skyrocketing higher than a lot of these altcoins. And so Charles also talks about that on an interview he did with I forgot his first name.
And 7 or 10,000 people got liquidated. We are just getting started. So I'll give you 2 statistics. One, $760 billion left the market when the tariff thing came. That was larger than Luna or FTX on that day. And 7 or 10,000 people got liquidated one day. It's twice the size of the amount of people got liquidated during the Luna collapse. Took us 2 fucking years to recover from that. We recovered in 48 hours from that event in terms of volume, liquidity, these other things. Okay. These are hot markets. So now when these guys just this is an uncomfortable thing for us as an industry, because this is the first cycle in the time I've been in crypto that's not retail led. The last 3 cycles were all retail. This cycle's institution led. And it's a lot bigger, a lot more organized. And so I don't know how it's going to pan out. I know everything's going on. I think Bitcoin's 250K minimum, and everything's a ratio of that. But I don't know how long that's sustained. I don't know where we're at in the cycle. I just know that it's impossible when the U.S. government is pumping your bags for your bags not to go up. They were the original pumper. It's called the Federal Reserve. We are.
And then the last one over here is this idea of what will get
the
traffic.
Markets are shifting a little bit, and they're going back to blue chips. They're going back to the reliable, the dinosaur coins, as people like to call them, like XRP and Cardano and Ethereum. And they're moving away from the new stuff like memes and these types of things, because it's no longer retail led, it's institution led, and they have to go to a flight to quality. So those are going to be the ones that drive the market. Bitcoin is going to be the biggest winner because it's going to be in the sovereign wealth funds of pretty much every country. 20 to 30 major countries, hundreds of billions of dollars of buying. U.S. government already holds 212,000 Bitcoin. Just give another 6 to 12 months. So we'll see a bull market probably when the stablecoin bill passes.
The government got those through seizures and forfeitures, but until the U.S. government starts purchasing Bitcoin as part of our reserve, that'll be the pump of the century. There's no question about that.
Yeah, so I'm really excited about this idea. Well, first, Charles doesn't normally talk about price. Like his whole thing is that he does not talk about the price of an asset. So if he feels that that's the case, it's like, no, he thinks this regulatory clarity is going to come. XRP is our test case or one of the test cases for what happens when if there is going to be clarity, because I mean, they've exploded up XRP. Ethereum looks like there's it looks like it might be preparing for a short squeeze. There's record short interest on Ethereum right now. One, because it's a nice play to be long Bitcoin and short Ethereum. But if that needs if that needs to cover, you can get GameStop level squeeze on Ethereum. Solana is barely took a dip recently. So you have a bunch of all the selling pressure that we would have expected. Like I would have expected, like we were talking about, 88,000 in Bitcoin, 74,000 on Bitcoin. Heck, maybe we still get there, but we're not there. And you can have you can have a correction in an asset over time, not only in price. So the longer that an asset consolidates, the less likely sometimes it makes the downside risk. Do you feel the same way?
Yeah, I think consolidations get a little worrisome because it's still unclear which direction you head to. I like to see nice confirmations of ranges that are still in that upward trend. But we discussed that consolidation concern even through most of 2024 when Bitcoin was in that long consolidation cycle between March before it finally broke to a new high in November of last year. And that consolidation period was sort of the only way that it was going to move out of it is if we saw a break above 74,000 or a break below 53 roughly. And we did see a quick break below 53, which was immediately recovered and then shot upward from there. So the thing that would concern me about long consolidation ranges is a break to the upside or downside from there.
I see. Well, we also had PMI. The PMI ticked above 50. So the PMI is it's a diffusion index, so it's not like it's just measuring the opinion of a certain market participant, especially in the manufacturing sector. But usually when it's below 50, or is it 48? I think it is. That's where you're like in recession territory, and that it's moving up towards 50 means that we might just be at the beginning of the cycle. Let me just share my screen real quick. So over here we have the PMI, and anyone can see that it oscillates in this sine wave, and these represent a business cycle and business cycle expectations. And so if this was a bottom that we had recently, well, we're really at the beginning of this move. Like we're not. A bunch of people are like, oh, we're 3/4 way through the bull market. It's like, no, we might just be really at the beginning of this thing if this is actually the correlation picks up. Also, if we take a look at the liquidity thing I was talking about before, so this is Mike's your liquidity indicator that's just offset by
70.
70, 78 days. And I've been following this, and the sort of like the it's not exactly the average, but the mix between the current liquidity and the lagged one gives me a sense of what the actual liquidity is at the moment. And that's why over here I'm expecting to see a significant bounce, because we have both the concurrent liquidity now that's moving up, and the liquidity 78 days ago is moving up at the same time. And so I'm expecting to move all the way up to 100. I'm not expecting all the way to 109, but I have my long position up to 106,000 on Bitcoin before we go sideways and then up again. And if this happens, this rise here would then happen in April of 2025, that we would get the full breakout to 250,000.
So to support your thesis a little bit further here, we talked a little bit about my technical forecast on Bitcoin back in January, and I had kind of scribbled on some ideas about where I thought Bitcoin goes from here. Interestingly, we're kind of moving into that territory of what I originally drew on my screen. But I'm still looking at that break of 110,000, and I would still be expecting we head to this range, up to about 180 to 195,000 if we continue from here. There's no doubt in my mind at the moment, though, that this current consolidation, though, is still part of this 74 to 110 range. That is an important critical area. If we do pull back at all in the short term, I would expect that 75,000, 74,000 remains as support, and we would see a continuation from there. So we'll see how close my little green scribble actually ends up being into the future here.
Awesome. I love seeing this then. So the in that box range, does it matter how far to the right you are of that box? Does it make it less likely that you actually get down to the lower end of that range?
No, I don't care how wide it gets. As we saw, like in the previous box here, this range still maintained throughout the entire period, even though this was a solid 8 months, 9 months. These ranges can last quite a bit, quite a long time. The important factor is whether it respects that range and it serves as support and resistance. So what we're going to be looking for is whether we see support at 75,000 to maintain this range.
Well, what I've always been saying is that missing the upside is the painful move, not missing the downside, because you can always get back in if it drops. And so for me here, it's like long until I like that you're saying 110 there for the top, because 109 is what I have on my chart here. I'd be closing my long position, waiting for the break, and then look for a pullback. But as far as accumulation is concerned, like this is where I started messaging all my family members and friends and be like, you got to start accumulating some Bitcoin. You got to start accumulating it, because I don't want to be the guy who later on they're like, why didn't you tell me to buy? It's like, no, this is the time. I think like if there's any a bunch of signs that point to bullishness without it breaking out to 150, now's the time, I feel.
Sure. Yeah, totally agree. I think there's still plenty of upside too.
Excellent. Well, that's it for today's After Hours. It's been fun, Mike. I've been enjoying the week, and I'm very surprised that Donald Trump is president and the sky hasn't fallen. Which is what I was told by everybody, and that's not the case. Tariffs have made Canadians a lot more awake to what's going on with the rest of the world. We're like, wait, what a second, tariffs?
I thought Elon was president. I forgot that Donald was president. Isn't that the story this week?
It's Father Elon and President.
Got it. Okay, understood.
Excellent. So we'll see what happens next week. I will be back next Friday with more After Hours. And always, we wish you happy trading.
Cheers, everyone.